Okay, so can you confirm? I'm requesting all of us to confirm whether I'm audible, and then the screen I've shared is visible so that we start the lesson right away. Abel, is
Very
it
audible.
visible?
Yes, yes.
Okay, okay. The screen also is visible. Okay. So, students, I wanted us to be very careful here, or I wanted the concentration to be 100% for now. So there is more things we need to know about this that question. This is the question I was saying that my assumption is that because that is what that is the criteria they used in the ACAST exam. This question was compulsory, and then this question, instead of 20 marks, it was 30 marks. And then apart from this question, also the other question was the application of the business and data analytics in financial reporting, which was also 30 marks. And then ikakuwa 60 marks. And then now the theoretical part of it, it was 20. So it is 20 questions, but each question is 1 mark. So ikakuwa 80. And then from the remaining 3 practical questions, you were to choose you were to choose one. So between the management accounting, between the application of the BDA in MA, that is management accounting, it can be also advanced management accounting, and then also auditing, and then also the auditing, auditing, and then also what? This is MA, that is management accounting. This is auditing. And then also the what? The taxation. So the taxation, the taxation. So you can prepare your mind that, you can prepare yourself that you know that there is a possibility that between the management accounting, auditing, and taxation, you will select one. You will select one from that question, especially the practical. But the application of BDA in FM, that is management accounting, and then application of BDA in FR, that is the financial reporting. Those are the two compulsory what? Those are the two compulsory questions. So I think you understand what I mean by compulsory. So it is not optional. So if because of one reason or the other, you have issues about those two questions, you will lose a lot. Because if you don't manage to do one, hiyo 30 marks inaenda, unaona? So the theory part of it, ile most of you people mnasema mna rely maybe ni rahisi, so it is only 20 marks. It is only 20 marks. So, and then one of the question is this one. So this is one of the questions nilikuwa nasema it is compulsory. And then now your financial reporting. So students, for us to understand more about this thing, and I'm also requesting all of us, so that if you have any question, kindly don't hesitate to do what? To ask here. So now what I wanted us to see is one, we need to see what do we call the before we start the lesson, I wanted us to see to say more about this net present value, because let me just read the question before I write some short notes here. So the question number 23, you are evaluating a 4-year project with an initial investment of 10 million on 1st January 2023, and the following cash flows characteristics. So you realize that we have the cash flow, Here we have the dates starting from 1st January 2023. And then also you can see these dates, they are irregular. These dates, they are irregular because you can see we have June there, we have the July, we have the September, we have the December. In fact, even it is different. Even the years also is irregular. And then now we have also the cash flow. The first one, uh, is the what? Is an investment or outflow. That is the investment of 10 million. And then apart from the investment, you can see now we have the inflow. You can see the inflow for 1, for 2, for 3, for 4, something like that. So 1, 2, 3, 4. So now the examiner is asking us, and then we have also the discount rate. The discount rate is given as 8%. The discount rate is given as 8%. And then the required, calculate the net present value and then the XNBV, the net present value or modified. We call it modified or extended net present value of the project, and hence determine whether the project is viable or not. So I like the cause of difference between the net present value and a modified net present value, or in other words, extended net present value. Explain which one you would use in your analysis and you give the reason why. So you realize that the two questions, if you scroll in your screen, you realize that it is how many marks? It is how many marks, students? You realize that it is, in that question, we have 6 marks to calculate the net present value, and then the modified net present value, it is only 6 marks. And then the question Roman number 2 is 4 marks. So itakuwa ngapi? Hiyo itakuwa 10 marks. And then also that at the same time there you have seen what we have, what we call the internal rate of return. So I wanted us at least tuangalie before we do the question. I know you people, I know you don't have any problem with that, because hakuna mtu alikuja hapa akasoma, hakuna mwenye aliingia kama hakuwa amefanya kitu inaitwa nini? Financial management. Unaona? Kila mtu alifanya financial management. So that is why financial management. So and then mushapitia hizi vitu theoretically. So the only difference here is that we are doing it in the computer. To be specific, we are doing it in Excel. And then doing these things in Excel, it is much easier. It is much easier than doing it manually using the normal calculator. So now, as you can see, so as you can see the net present value. So net present value, you people, I know you know it. So net present value, but maybe I can write something small about net present value, but the other things I think you already have it. So the net present value, or the net present value, NBV, so is the difference between what? Can somebody tell us? The net present value is the difference. So the net present value is the difference. The net present value is the difference. Is the difference between the the present, the difference between the present value of cash flow so the difference between the present value of cash flow and present value of outflow. So net present value NBV, it is the difference between the present value of cash flow and the present value of outflow and present value of the outflow. That is what I hope. That is I hope you understand what I mean by I hope. It is what? It is initial outlay. It is initial outlay. So net present value is the difference between the present value of cash flow and the present value of the outflow. So that is what we mean by net present value. So, and then also maybe something, if we can add, also we can say that cash flow, sorry. We are doing the practical part of it shortly. So cash flow, the cash flow are discounted. The cash flow are discounted using firms cost of capital. What do we or we call it what? Another name we call Apple is what? The what? The cost of capital is also referred as what? Elizabeth? Abdi? Rita? Magdalene? It is also what? It is also W. It is also WACC. See this there? Yeah. So it's also WACC. So, and then in most cases, in summary, so we have the acceptance rule. Let me just write it briefly because of time. Acceptance rule. Under acceptance rule under NBV. Acceptance rule under NBV. So one approach check with a project with a positive, a project with a positive NBV is accepted. The project with a positive net present value is accepted since it increases the shareholders, shareholders wealth. So that is the what? The value of the farm. The value of the farm. The value of the farm. Close the bracket. While the what? While a project is rejected, while the project is rejected, while the project while the project with a negative project with a negative net present value is rejected, since it reduces the shareholder, since it reduces a shareholder, it reduces a shareholder wealth. Shareholder wealth. And then now, before we continue, or before we continue, okay, so also you need to note this under the net present value, NBV, whether you are doing it using Excel or doing it manually. For ranking purposes, the higher the net present value, the higher the NBV, the better the profit. In other words, what I mean by this, I mean that if at all, you are trying, if you are keeping so if you are what, if you are given, like, for example, maybe different projects. If you have maybe project A, B, and C. So, and then maybe you need to advise the investor. So in most cases, the project which has the higher net present value is the one which in most cases will be having what we call the higher profit, the one which will be having the higher profit. And then definitely you will advise your investor to call for a what? To call for a project which has a higher net present value, the higher net present value, the higher net present value. So there is also something I wanted us to note because it will assist us to solve this question, to solve these two questions. That is question number A, Roman number 1, and question number A, Roman number 2. That is calculate net present value. You know the difference. So I wanted us, maybe we can write it down there so that if we go to the question, there is no, you know, we already have the information. We already have the information. So what were you asking? There is somebody who's telling me maybe I scroll what? I'm not getting Apple, unasemaje? Please scroll the what to the top of the box kidogo. Or is it okay now? Okay, so there is also something here which I wanted us to note for the advantages and disadvantages of what do we call of net present value. Maybe that one I'll share it. I will share the notes because of the time, because for our case here, it is just a practical. So NBV, the net present value, assumes that payments are done. Payments are done, or payments to be made in future. In future will to be made in future will be made in will be made on, sorry, not in, on, will be made on a regular basis. A regular basis with equal time intervals. And then that is not the case in what? In the modified internal rate of return. Modified net present value or extended net present value. So the net, the net present value here, NBV, assumes that payment to be made in future will be made on a regular basis with equal time interval. Like for example, if it is maybe 22, if it is 22, I don't know whether you are seeing what I'm doing. Yeah, I think you can see. If you scroll, if you are using the phone, you can just scroll it. So if it is 22, maybe if it is 22, 2020. So also ikikuja huko, if it is yearly, in most cases, so it means that it will be also 22, that one, 20, 21. So like that. That is the what? The net present value. In assume that if it is months, it's the same thing. If it is the months, like that. If it is yearly, and then the next one will be 22, 5. My assumption did that in the middle one is the what? Is the month, and then the left-hand side of the left of the far left is the what? Is the date. And then 20, 22, like that. So that is the assumption of what? Of the net present value, But for and then for what we call the extended net present value, it is like this. You can see these are irregular. These are the irregular, these are the irregular what? It is in irregular basis, because you can see here, it is January. If you call this one, it is what? It is June, like that. So it means for these dates, it is for what? It is for the modified net present value. It is modified net present value. And then there is something I wanted a student in class to clarify, so that at least we continue. And then maybe also I can appreciate that we are together, or you know what we are doing. So I wanted to ask, and then it will be an open question, which it means that what I mean by an open question, kila mwanafunzi atajaribu, kila student ataijaribu. You will just say, you can unmute yourself, and then maybe you can explain it to us. So my question is this one. My question is, what is the time value of money? The time value of money. Or tuseme the investment, kama nimeinvest sahi currently, and then kama mtu atakuwa analipa in future, so will it affect the value of the money? So, and then the value of the money, is it depreciating as time goes, or is it appreciating? That is the question. So I wanted somebody to clarify that. So whether the time value of money, or in other words, the time value of money, or the time value is in, kama nimeinvest saa hizi 100 million. If I've invested 100 million, and then maybe hiyo pesa, nitakuwa napata it in the what? In future, maybe, because most of it is in future. That is why you can see there, it is future. So that is why we have what? That is why we have the cost of capital. So because I know now I'm also answering the question. I wanted somebody to assist us, to explain to us in understanding way. So ebu somebody ajitolee kwa class atueleze, so that tukitoka kwa this application of BDA. Yes, it is okay. Can you unmute and then to explain in details? Yeah, I think umesikia there is a student hapo amesema, Apple ametuambia ina depreciate, the value of money ina depreciate as time goes. So it lose value with time. Very good. So I think all of us, we are okay with that. There is nobody of even Elizabeth imeona pesa zina lose value as time goes. Because of what? Hata saa hizi ukiangalia mwenye alikuwa na 1000, let us say maybe I can use an example myself. Nilianza kufunza 2010. So by then maybe I was earning something like a 20,000. And then those 20,000 ukikombea na saa hizi, by 2010, with that amount ningefanya a lot of things, but now there is 20,000 ni ya kulipa tu rent, na hii hata nyumba yenye unakaa ya 20,000 ni nyumba tu iko hivi, si nyumba mzuri. So if you need a very good house, you'll go for what? 40,000. You know, nowadays with this economy, 40,000 land. So the what the money in a loose value is times cost. So that is why we have what? That is why we have we discount. That is why you have seen here, we have discounted this amount because sinalipwa in future. While this one una times by one because it is equal to the same. We don't discount the investment because it is something you are unaweka saisi. So we don't do what? We don't discount. That is why in most cases, even when we are doing the net present value, we don't what? Ukienda kwa values, we don't select it, including the what? Including the present value. But we do it for the what? Why extended. So I think that is what I wanted. If we have that point, I think that is now it's very clear. So I wanted us to go straight away and then we solve this question. I wanted us to go straight away and then now, so we solve that question. So let me just, maybe I can press control. So let me just, let us continue now and then to the question. So now we'll be concentrating on, I start this Obama nimesum zaidi. Okay, so let me do this. Okay. So when you are doing these questions, students, the first thing you should appreciate is that it is a very simple question. That is number one. Number two, there is some, even kitu kidogo ukikosea, you know, like for example, there is an issue about these dates. So unaweka according to the dates vile machine yako or Excel yako imesetiwa. Unaona, especially when you're trying to do the modified internal, the modified net present value. So maybe we can do the calculation down here or even aside, it is still okay. So maybe I'll select these questions and then I will drag it downwards. That is it. And then now I will do, we'll do our question here. So maybe down there it is still okay. So let us start with the dates. The variable number one is the dates. And then maybe here we say the year. Ama tuseme years, year. I think that the best way is the year. So let me just make it bold. Then maybe I can increase kidogo. And then I drag it downwards like that. And then now I come to the what? I come to the cash flow. And then let us try to get a cash flow. And then I will select this format and then I click here. And then maybe, okay, I double click. And then from here, okay, so for this, let me start with the dates here. So unakuja hapa kudrag, unaona vile imeshikana hizi madates. So unakuja hapa kutengeneza. Unaona hiyo question ilikuwa imekuja hivyo. So maybe utajaribu kuadjust kidogo. but haimaanishi unafaa uiharibu sana. So let me say that this question as per my computer, my computer is 1, inaanza na month and then the day. So it means that kama inaanza hivyo inamaanisha what I do. And then you can check also from your end. You can check from your end. So let us start with the year. Actually, this one. And then, so it is 1 to how many years? To 4. If I'm not wrong, I guess. So 1, 2, 3, 4, 5. It is actually 5 from year 1 to year 5. 1, 2, 3, 4, 5. Okay, I think so. So ndakuja hapa kwa series and then to 5. And then I make sure that it is column wise. Then I click OK. So that is it. And then I can see 5 here. I need to adjust it. I think it's okay now. Then maybe, yes. And then now I come to the dates. So I need to do it, the dates. So it means that the first one, it is 1st January. It is 1st January. So the first one, it is 1st January 2023. So it is 1 2023. Then I don't need this bold thing. So don't worry, the format is the issue, but I don't know, maybe I can change that. Okay, and then the second one is what? Is 6th dash and then 30th 2023. So mina select as per my what? As per my what do we as per my so maybe this one I'll select the format so that it will be visible from your hand. So and then the next one is what? Is July. So mwezi wa 7 tarehe 30th and then 20. That one should be 2024. If I'm not wrong, 2024. I will still select this format, and then here. And then also that one is September. Sasa September ni mwezi wa 9. And then 30th. And then 20 what? 2025. I copy also this. And then the last one is, the last one should be December 31st, 2026. Najua tumesema ni future, so I'll select this format. Then here. Okay, and then now we go to the next what? We go to the what? The cash flow. So the first one is 10 million. So 1, 2, 3, 1, 2, 3. And then now I do go to the 1,000 separator, that is it. And then from there, let me just copy. Okay. So this one, so that is it. And then, so this one should be what? This one should be negative because it is an investment, pesa zinatoka, so I press, so it is a negative. So, and then we come to the next one is 2 million, 2,750,000. So this one. So na hiyo font nimeweka ndio ikuwe visible from your end, but you can use any font of your choice. What I wanted us provided it is visible from your end. That is what I want. So this one is 4,250,000. And then zeros ngapi? Tatu. 1, 2, 3. And then I selected this format. I copy. So like that. And then apart from that, we have also what? We have 3, 250, 000. And then we have 2, 750, 000. I then let me just 1 separator. 2, I change the font type to this. So 2 million, 2 million, 2 million, 2 million, 2 million, 2 million. I think this one is okay. So yeah, decimal places, this one. Maybe I can remove the decimal places and then maybe I can center or in the left like that. Okay, so now we need to calculate the net present value. We need to calculate the net present value, students. So this one, okay. So we need to calculate the net present value here as per the question. So equal sign, and then nikuje hapa. No. Let me just click here. Let's click here. So the net, calculate the NBV. So I copy. Then here, I control. So calculate the net present value. So how to calculate the net present value? It is very simple, students, because what we do, it is equal sign. Okay, before we do that, we need also to capture one more thing. That is what? The discount rate. The discount rate. So maybe we can write it discount rate here. So discount rate, we have also reinvestment rate. So the discount rate is 18%. Is it 18 or 10? It is 8, sorry. It is 8. So that we'll be in a position so I will simply copy this. I think and then for this, okay, so from there, it is very simple. It is very simple. It is very simple from there, students, because maybe they can add also reinvestment rate, maybe to 8% there, but let us deal with the question as it is. So now it is very simple, equal sign, and then NBV, that is the net present value. If you double click, we have the rate. Our rate is this one. Na tulikuwa tumeagree kwa class, tulikuwa tumesema all of us, we understand, we know what we mean by what? The reinvest, cost of capital, that is rate, the cost of capital, because of the, hiyo value ya maana yenye inafanya nini, itakuwa inapoteza value as times goes. So kama si kitu ya kutumia, lazima we need to discount it. We need to discount. I think you understand what I mean. So comma, and then tukuje value 1. So for the value 1, you will only select the envelope because we don't discount the initial investment. That is what? 10 million. And then you can see it is even what? It is negative. And then I do what? I close the bracket, and then plus what? Plus the initial what? The initial investment. And then I simply press enter. Wow. And then that is what? That is my NBV. That is my net present value. That is my net present value. David, I will just send you the video, so don't request it to record it from your end. Because of security, I will not allow you to do that. So that is why you see I'm denying. For the security of the school's account, we are not allowed, at least we do what? Allow kila mtu a record. I will just record, and then I will do what I did the other time. I will just see, do that immediately. So, if we to calculate the what? The net present value. The net present value. So the net present value is what? Is 273.16. There is also another method we can do that. We can as well calculate the BV, the present value. We can do what? We can calculate the present value, the total of the present value, and then we subtract the initial capital, we'll get the same. So we need also, let us try to calculate this one, the NBV. So, and then when calculating the net present value, when calculating the present value, when calculating the Abel, can you redo the what? The net present value. It's okay, it's okay, it's okay, it's okay, it's okay. So to calculate the net present value, so we start with an equal sign, and then I type the function. You know, this is a what? A financial function in Excel. So I double click, and then the rate. The rate is the discount rate. This one. Okay, hapo ningefaa niandike discount rate. So it is supposed to be discount rate. So let me just change it so that at least so discount rate. So for those students, maybe because of one reason or the other, they didn't manage to get what I was doing. What is very important, students, when you are dealing with that question is these dates. Sometimes, especially ukitaka kucalculate the modified net present value. Usipoweka hizo dates the right way, you'll find that you will be in a trouble, or the whatever you're trying to do, it will not be, haitakuwa ina work. Unaona? So if we come to this question, if we come to that question, so to calculate the net present value equal sign and then NBV, and then I double click, and then rate. So rate ndio hii. That is our rate. That is the cost of capital. And then minus value one. Value one, you select only the inflow because we don't discount the investment. We don't discount the initial, what we call investment, and you know that. So, and then I close the parenthesis, plus, the reason why inasema plus because huko ni negative, plus this one. And then I press enter. And then that is my what? That is my net present value, my net present value. So I wanted also to show you another way of calculating the net present value. We can calculate the present value for each year, for every year. And then we add the totals, and then we subtract the investment, we'll get the same thing. We'll get the same thing. So the present value for this one, if we calculate the net present value, so I start with equal sign, and then net present value. Okay, you can see we have the rate, we have the value. Okay. Okay, not that one. It's supposed to be NB. Actually, this is supposed to be present value. So it's supposed to be B value. So you realize that we have the rate, we have the number of the periods, and then we have the future value. So of which our future value is this one. Our future value is this, but we don't have the what? We don't have the number of the periods because the number of that one is actually 0. So I can request the as with that from this one. We start with this. So equal sign, and then present value. I double click, and then rate. The rate remains the same. It is this one, comma, and then the number of the periods is what? Is what? Is 2. Okay, is this one. And then now, the future. So we don't have the what? Payment, we don't have that one. So maybe utaweka comma, and then uweke another comma, and then the present value is what we have here. And then we close the bracket. So, and then we close the bracket. We close the bracket. We close the bracket. We close the bracket. But you know, this one should be negative. So if I press here, you will see it is red. So we need to do what? we need to make this one to be negative, and then you know the reason why I'm saying like that. So if I press enter, it will be like that. And then from there, now I do what? I drag. So I drag, and then I calculate the totals. So let me just calculate the total. So the total is that I'll select and then auto sum. Okay, I think there is a problem. That is not the correct answer. So I think tunafaa to answer year 0. And then this one is year 1. This one is year 2. This one is year 3. This one is year 4. That is year 4. So let me just redo it. Okay, so the present value is equal sign. You know, this is the second method. Tumefanya the first method iko sawa. So I'm just trying, we compare the first method and the second method, we see the difference. If there is a difference, lazima hakuna, there is no difference actually. So the rate is still the same, comma, and then number of periods 1, and then comma, and then future value is this amount, and then I close the bracket, then I bruise enter. So this one, this is what I will make sure that it is locked. Oh, it is no. This one, it should be that one, and then the rate. I should also lock the rate. I think una kitu sikufanya. I should also lock the rate. I should also lock the rate. So the rate inafaa ikuwe kwa I what? I11. If I'm not wrong. So it should be high 11, and then I make it absolute. The reason why I'm making it absolute because rate remain the same. It doesn't change. So I change, that is why in lock. So that is something I didn't do. That is why it was giving us the wrong marks. Then now I drag. So from there, let me just calculate the auto sum. You see, if the very good, very good. That is it. So I had forgotten to do what, to lock the cell and then make a negative. So now from here, if you subtract the investment here, definitely you will get what? So the NPV, the net present value, students, the net present value is equals to what? How do we do it, Abel? Tutafanya namna gani? Because ile ni negative. So nitakuja hapa and then tutafanya namna gani? Will I subtract or add? Abel, nitafanya namna gani? Will I subtract it or add? Can somebody assist us in class? Okay, we had. Somebody saying we had. Then I press enter. And then that is it. You can compare this one. So there, we have two methods of doing it. We have done the what? The net present value for each and for every year from year 1. So year 0 ndio siku yenye ulifanya nini, uliweka the investment. So and then I'm not getting you Apple, unasema aje? Sijakuelewa kenye unasema. Why is it 2 when both the capital investment and the period are in 2023? Or I've corrected that one, I guess. I've corrected it, isn't it? So ningevaa ni start na year 0. Okay, oh yeah. I think that is why tulikuwa tumepata the wrong answer. So that is how to calculate the net present value. So the reason why I'm saying it is good for us at least to do the methods is we don't know. Maybe they can be specific kwa kuambie utumie the present value, that method, but at the end of the day, the answer will remain the same. At the end of the day, the answer will remain the same. At the end of the day, the answer will. Okay, so okay, that is it. So we have answered one question here. We have answered the question. Tumejibu swali moja hapo. Tumejibu swali moja. Tumejibu one question. Tumejibu question number. Tumejibu the only one question. That is the question number what? That is the question number. That is the question number. That is question number A, Roman 1. Calculate the net present value. Oh, we have not calculated the what? We have not calculated the modified extended, the what? The modified net present value. That one is very simple. It is actually very simple. So I will go back. And then we calculate our modified net present value. That is the what? The modified net present value or extended. It is one and the same thing. Let me just take it like the way I've done before. So calculate the what? Calculate the modified, so that XNBV, it is either the modified net present value or extended net present value. So to calculate this, and I hope all of us today, lazima tumalize hizi questions mbili. Lazima tumalizana na these two questions so that tumalizana na hii question mpaka tujaribu tufanye ile ingine ya analysis of what so that at least we forget about it. So the modified net present value is just equal sign and then XNBV and then like that. And then you know the rate. The rate will remain the same. The rate will be this, and then comma, and then the values. So the values for these students, we select everything, including the what? That is the cause of difference. So that ukiulizwa the difference between the net present value, apart from the irregular basis, or date zake zinafaa zikuwe regular. Kama ni kama if it is like, for example, it is January 2020 what, or if it is January tarehe moja mpaka next month February tarehe moja, So the other thing is that when we are calculating the modified net present value, we include everything. So values, it is all this, including the investment, and then comma, and then now what they have added here is the dates, of which I have to select all these dates, and then I close the bracket, and then I'll brace the enter. Wow, and then that is it. And then that is it. And then you have realized in our answer that the net present value under what? Underestimate the net present value. Underestimate the what? The NBV. So you have realized that. So unaangalia, then net present value for this, it is this one. And then for the modified net present value is this one. So this a modified net present value, it is the updated version of net present value. So unaona haijai underestimate anything. Unaona hiyo umeunderstand. Hii ingine, it is still a viable project because it is a positive. Actually, if the what? If the project, if the net present value is greater than 0, if it is greater than 0, so there is a possibility that your project itakuwa na profit, unaona, so it is still viable. But now and then if and then let us say that there's no profit, the net present value of a project is 0, so it means the internal rate of return also is what? Is the percentage is what? The percentage rate is still what? Is still 0. Okay. So for this case, that is what? The internal rate of return. No. Why am I confusing the internal rate of return and net? This is the modified net present value. Umeona the difference? Unaona ile ingine ya kwanza, the net present value ilikuwa ime underestimate the net present value. So hii unaona there is a difference. The difference iko on what? The one which is more accurate, which in fact you can advise, even I can advise you as an accountant to be using, is the modified net present value, because in a factor in, what we call irregular, their basis is irregular, of which that is the case in the wall outside there. Unaona, si ati lazima ati pesa, pesa vile zinakuja is irregular, it is not regular. But for net present value, ina assume that kila kitu iko nini, ina assume kila kitu inakuja at the same time. Kama nimereceive leo tarehe 2, next year itakuwa tarehe 2. So it is irregular. If we go to the practical wall, it is what? It is irregular. Even your salary is not regular. Or is it regular? It is not actually regular. It is irregular. So that is the day, that is the what? The issue. Okay, so to answer this question, calculate the net present value and then the modified net present value of the project, and hence determine the project is viable. So one, the project is viable. The project is viable. I'm getting, there is somebody amesema turudie, tutarudia usijali. So the project is viable, that is one. The project is viable. And then the project is viable because, the project is viable because the NBV is what? Is positive. Is positive. So the project is viable because the NBV is what? Is positive. So with that, the way we have answered it, we have our 6 marks. We have our 6 marks there, because to make calculate the net present value, to make calculate the what? The extended net present value. And then we have also advised the investor that the project is what? The project is viable. It is actually viable because the NBV is what? Is positive. Is positive. And then Roman number 2, highlight the cause of difference between the net present value and then the modified net present or the extended net present value. Explain which one you would use in your analysis. So one, in your analysis, you will try to use what? We try to use we are not trying, you will use the what? You will advise the, you will be using this, so tutakuwa tunatumia gani? The modified net present value, because that is actually the reality. And then you have realized that I just underestimate the what? Our net present value. So extended. So the first one, you would use in your analysis, utatumia the modified net present value, not the normal, not the ordinary net present value. And then the reason is, explain which one you would use in your analysis and why. So in my thinking, or what I think for this case, this one kwanza is what we'll go for. We'll use the extended net present value simply because in a factor in irregular, of which that is the reality outside there. So this one, it's more realistic than the what? The net present value. That is my reason. It is more realistic as seen because one is the time interval. So the time interval for this one is what? The time interval, the time interval basis. That is, this one is irregular basis, and then the net present value is what? Is, no, this one is irregular. In a factor in irregular cash flow, irregular, ile inaingia different dates, different months, but the other one is fixed. So that is my reason why I suggest that one. And then I'm sure I'm really correct with that. So that is my reason. Maybe we have many reasons. Another reason, that is the main reason actually. That is the main reason. So, and then the next thing we are supposed to do, so the reason you suggest this one, you will go for extended net present value, and then because of what? Because of the time interval, because of the timing, because of the timing is seen inaenda na irregular date, which is actually practical, which is what is happening outside there. This one can tell us a lot. This one can take us a lot. And then that is your 20 marks actually. That is your 20 marks. Kwa hapo umepata your 20 marks. Your 20 marks. Or anybody gonna different opinion about the Roman number 2. So is there anybody who has an opinion or an addition on the question number A, Roman 2? That one, Roman 1, we are okay with that, or we are okay with that, all of us. I think that one is okay. There is no any question. Is there any question about question number A, Roman number 2, or any addition, something like that? So if we don't have any question, we'll proceed to the next question. I have two questions. Niko na two questions here. Question number 1, Elizabeth anasema turudie, we repeat the present value. And then Abel anasema tufanye the modified net present tena. Okay. So let me start with the question of the Apple, because yeye alikuwa ameuliza wa kwanza, and then I will do the other one. And then tumesema wacha tungangane ndio tuweze, it's almost 6 actually. Oh, yeah, no. It is already 6, It is already 6. Na the class, I'm requesting kama mutanipatia time yenu kidogo, because tunafaa tumalize 6, but sioni nikimaliza. So at least you'll give me time so that we solve also the Roman number 2. Question number B, Roman number 1, and Roman number 2. I need your confirmation from the charts. I need the confirmation that mutanipea your time, because time yenu it's supposed to be what? Today is in a class ya ICT, so maybe we can extend a bit, but only with your permission. Otherwise, you can also we can do it on our next lesson, but next lesson sasa unajua tutangojea sana. Tutangojea sana. So I'll only you know, I will wait for your feedback. So you can just give me your feedback as I continue doing this one, whether I continue to do that one. Okay, Rita is saying we continue. And then unajua naangalia majority because in fact I'm recording even the class. So repeat between permission granted, Elizabeth, and then we continue. And then anybody else? So only 2 students. Wengine wamenyamaza, tumalizie hapo tuendelee the next lesson, or what is your thinking? So let me just continue. I'm waiting for your feedback from, nitaangalia the feedback because I'm seeing Monica. We continue. So I think majority of the students, and then mtu kama Apple sijui kama Apple I think ako sawa. And then David. So we continue. So somebody is saying that we do what? So calculate the what? The modified net present value. So equal sign and then X NBV. Very good, very good. That is also, I think that is a point also you need to do what? You need to factor in Abdi. Net present value takes 2 arguments, while takes 3 arguments. So, but you need to explain more, Abdi. What do you mean by 3 arguments? Can you explain? So, a net present value and then the modified, sorry. So, the rate. Mwenye ameuliza hii swali, Apple angalia vile tunafanya. So, the rates, it is still this one, and then comma. But we need to do what? This, what do we call this rate? Inafaa to make it absolute by pressing, we need to lock it actually, because you know I change, it is a constant, and then comma, and then ikuje values. So for the values, we have to select everything, including the investment there, and then comma, and then now also we selected the dates. And then I close the bracket, and then that is it. So I hope you are getting it now. I hope you are getting it now. And then we go to the next question. 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 We go to the, somebody was requesting about this question. There is somebody who was requesting about, kuna mtu alikuwa anasema, please repeat present value. That is, it is Elizabeth. It is Elizabeth. So Elizabeth, I think we can do that. Naona ni kama uko so the present value, let us do it for each and every. So to calculate the NPV for each and every what? For each and every year. So I will delete everything. So we start with, so we didn't calculate this one because this one is actually not discounted. So tumekuja 1 equal sign, BV, that is the present value. I'll double click, and then rate, it is this one, comma, and then the number of the period is 1, and then comma, and then we don't have the payments, so naweka comma mara mbili, and then we have the future value. The future value is this one. It is future value is that one, and then I close the bracket. And then now tunafaa tuweke negative here. You know the reason why I'm doing that? Or if you don't know the reason, maybe utaniuliza the reason kwa nini. So, and then I press enter. And then now we do what? I'll drag it like that. Okay. Okay. There is something I actually didn't do. So I need to lock this. I didn't look, okay. I didn't lock. So let me just delete this. And then I need to lock the rate here by pressing F4. Then I press enter. So I think that one is okay. So, and then now from there, I do what? From there, I do, from there, sinta calculate to summation. Takuja hapo calculate summation, ndio. So it is like that. So, and then equal sign, nikuje niseme this plus, because this one is negative, because tunavaa to subtract, and then I'll get my recent value. And I think now it is clear. I think it is okay. I think it is okay for all of us. That one is okay. I think that one is okay. So we need now to go to the next question. We need to go to the next question because you people, you have given me the permission to continue. Okay, so we need also to students to calculate the IRR. So we need to calculate the IRR. So the IRR, calculate the IRR and modified internal rate of return of the project, and hence determine whether the project is viable. So the decision rule for the IRR is one. I don't know why I have a problem in the screen. This screen inafaa ijae, but naona ikiwa na issue. So let me just try to. So the IRR. So we need to calculate the IRR. So we need to calculate the IRR and modified internal rate of return also. So unaona ukisha calculate the what? Once you have calculated the So we need to calculate the IRR. So tunasema, if we are using the IRR to determine whether the project is viable or not, if the IRR, that is the decision rule, if the IRR is greater than 0, project will be what? Accepted. And then if the IRR of the project, if the IRR is negative, if the IRR is negative, or let us say if the IRR is less than 0, which is negative, so the project will be what? Will be rejected. That is the decision rule. So that is it. Number 2, so let us calculate the IRR. So IRR is equals to IRR, and then I double click, and then values. So it means that we selected the values, all the values, everything like that. Then I close the bracket, and then I press enter. So now, ukiangalia the what? Ukiangalia the at this rate, ukiangalia this rate plus this one. So if you check on that, the two rates, you realize that the internal rate of return is greater than discount rate. So it means that the decision rule is what? It is what? It is positive. It is positive, or it is greater than what? The discount rate. So it is viable. Ingekuwa equal to this, or ingekuwa less than this one, ingekuwa equal to the, ingekuwa less than this, so ingekuwa something different, ingekuwa something different. So I'm just naangalia discount rate plus this one. So always for the project to be viable, this IRR is supposed to be greater than what? It's supposed to be greater than the discount rate for that case. Forget about this. So and then the modified internal rate of return. So equal sign, and then XIRR So the values and then comma and then dates. And then I close. Then I press enter. So now you realize that it is like the what? The net present value. The modified internal rate of return rate yake iko juu compared to IRR. So it means that the IRR underestimate the what? The internal rate of return underestimate. And then now, so the answer is 1. So calculate the IRR and XIRR of the project, and hence determine the project, whether the project is viable. So the project is viable. That is number 1. The project is viable. That is number 1. We don't have any problem with that. The project is viable. The project is viable. That is 1. We don't have any problem with that. The project is viable. And then number 2 is that, and then so that is 6 marks. That is 6 marks. I think that one tuko sawa. And then highlight the cause of difference between the IRR and XIRR. Explain which one you what use analyze you what you use in your analysis. So also the option is what? Our option is XIRR, and then the reasons why it is more, it is like the one for the what? For the internal, it is learned for net present value. It is the one for like net present value. Unless there is a question, we are done with that question. And then that is how we would have done it. That is how we would have done it. So a question, an assignment. So nataka tuangalie one, question number 1 is that tuangalie the number 1, tutaiangalia the advantages of net present value, the advantages of net present value, the advantages of net present value. That is, it uses the cash flow and not an accounting profits, ends not easily manipulated. It considers the time value of money by discounting the cash flows, uses the cash flow relating to the entire useful life of the project. It runs the project according to their true profitability. So anyway, I think that is something you can get it for your. So ukuwe na hiyo advantages na disadvantages of what? Of the net present value. The same thing to IRR. Mark, you know that when I started the lesson, nimewambia this question tumefanya hapa, it is a compulsory. It is a compulsory question. And then I think you have realized it is very easy. It is not something very difficult, So ukifanya practice vizuri about what we are doing now, you are sure that you have your 30 marks. And then now you have your 30 marks for, application of BDA in financial reporting. So unless there is a question, so maybe tomorrow, if you will be free, maybe we can also do another question for this from, so zoom on the IRR bat. So unless kuna swali, unless there is a question, otherwise we'll continue from tomorrow. Thank you very much, my students, for attending this class. And then I might call you tomorrow if you will be free from 4 to 6. Tomorrow is holiday. Lakini watu kama watakuwa busy ni sawa, wenye watamanage kuingia wataingia, and then I will share recording in case I do that. But there is a possibility that we'll be doing another question tomorrow. There is a possibility that we'll be doing the same, another question which was done just recently. We'll be doing a revision. So tumalizie hapo, and then I will just send recording immediately. So I'll communicate. I'll communicate. So maybe ndauliza kama in the morning. Okay, in the morning. So watu wengi naona wana suggest tufanye it morning. So maybe I will just communicate. So let me just work on the recorded video, and then in case kama kuna mtu hakuwa amepata, please don't forget to send also the notes on the please don't forget to send notes about the difference on the difference. So, yeah, I would not. Ni vile tunge type hizo, lakini time, unajua time tena ndio ingeenda sana, but I will just send the difference. So thank you very much. I will communicate if you will up to class tomorrow morning. Thank you.